Welcome to a Millennial's Guide to Real Estate Investing. Here is your host, Antoine Martel.
Hello and welcome to Real Estate Investing with Antoine Martel. I'm your host, Antoine Martel. So this first episode is just really about me and about how I got started, how I did my first deal, what made me get into real estate, and then kind of I'll be talking about what the rest of this podcast will be about. But just this episode is kind of just an introductory episode, of course, to give you guys a sense of who I am and what I do, and then hopefully I can help you along the way with this podcast, answering your questions, etc. So I'll start with just a little bit about me. So my name is Antoine Martel. I was born in Toronto, grew up in the Bay Area, San Mateo, California. Currently, I live in Los Angeles, and I was a graduate of Loyola Marymount University in Los Angeles. I got my degree there just last year in entrepreneurship. Shortly after graduating college, I got an internship with a successful commercial real estate investor here in Los Angeles. He was doing large developments, ground up, apartment buildings, 20 units plus. I was helping him underwrite deals, find deals, you name it. I was helping him do everything, from raising money all the way to finding new projects, etc. After that didn't really work out. I kind of wanted to do my own thing and really wanted to achieve financial freedom and go and, run my own business. I learned a lot helping him get started, but, through that time of helping him, I kind of realized that I wanted to work for myself, and that, even though it was just me and him working in a small office, I still wanted to be myself and really thought I could do things faster and do things better being by myself and kind of build my own brand name. So broke off by myself, and my whole goal was to create buy and hold rental properties out of state in a couple of different markets. So the way that I did that is I was, through these years when I was working with this guy who was developing real estate here in Los Angeles, I was also following a guy around too who was investing out of state, who was flipping houses. My father had actually invested some money in one of his deals, so I got really close with the guy and was able to ask him certain questions about how he got started in real estate investing, how he built his teams, how he raised money, what does he look for in a deal, what does he look for in a market, and kind of with those things I was able to, create my own business and my own methodology about how I wanted to get out there and grow my own rental property business. And I just wanted to grow a rental property portfolio for my father, who, has helped me with everything up to this point. I mean, helped me with college, helped me with everything. He actually brought us here from Toronto because he wanted a change of life and wanted to get away from the cold weather, and which makes sense. We moved to San Francisco in 2000. So from there, once I realized that I wanted to go and break off and do my own thing, I started to, with the knowledge that I had acquired from this other guy who was flipping houses out of state, I kind of learned the ropes from him about how to get started out of state. So I went and built my first team out of state. It was in Memphis, Tennessee. I called 200 agents there, found an agent who wanted to work with me, who wanted to help me do what I wanted to do. And, essentially what I told them was I wanted to buy houses, rehab them, rent them out, and then put a property management company in place and just hold them long term. And I wanted to build this for my father. And many of you guys probably know what the BRRRR strategy is, but if you don't, it's when you buy properties, rehab it, rent it out, and then refinance and repeat. So the refinance aspect makes it so that you can own these properties pretty close to without any of your own capital in, because let's say you're all in for a property for $60,000, you get a refinance at 75. 70 or 80% loan to value, you can pull out almost all of your cash in these deals, and it allows you with very little capital to keep buying properties, and getting loans on them. So that's kind of what my whole strategy was when I first got into the out-of-state rental property buy and holds. Was able to figure out my first market, did a lot of research about the market, which we'll talk about for sure in further episodes, because that's a big portion of investing out of state, is really why choosing a market and why you chose that market, right? So all the different factors that come into play. But anyways, that's what I did. And my goal was to really help my father. And then, over time, over a couple of years, we had achieved financial freedom. We had started making all this cash flow, and cash flow was coming in. I was really sharing on social media, on my Instagram, really about how I was doing it, what I was doing. and friends and family started to get involved in a sense as they wanted to invest with us and wanted to achieve financial freedom as well. So we began to help them along with their own journey, and help them acquire rental properties. We helped, with our whole team in place. So we would buy the properties, rehab it, rent it out, and then we would sell it to our friends and family, quote unquote turnkey. And they would buy those properties. They would use our property management companies, and then bang, selling properties to them. It allowed us to get more cash to then grow our own portfolio. But at the same time, we were helping our friends and family get started with investing out of state. And then with that, as that kind of progressed and people started to hear more and more about us, I decided to make a website called Martel Turnkey. And I wanted to help more people. I knew there was more people out there who, through talking with all these people who started to come to me asking for rental properties, I realized that there was a lot of turnkey companies out there, doing business in a way that we weren't doing it. We were treating everybody as if they were friends and family, no matter which way they were referred to us. And we started treating these people like friends, like we were treating our friends and family. And people really liked what we were doing and the differences between us and the other turnkey companies out there. And that's kind of how the business has grown. So in the last year, we've done about 25 deals. We're hoping to double that in the next 12 months as well. But we really take away a lot of the pain points that other turnkey companies have been doing for so many years, really removing those pain points and really treating everybody as if they were part of our family. So that website and that company is called Martel Turnkey. So that's one of the businesses that I run, and that takes up the majority of my time, and that's where I am today, and that's what I focus on. Not really expanding the markets, but just growing the business, doing more projects, really diving deep into the locations that we're doing. So a lot of people ask me how I financed that first deal, that first rental property out of state. How did I get the funds to do that? Where did I get the funds? Did I use a hard money lender, et cetera, et cetera? So that property, that out of state rental property that I bought, the first one I ever did was in Memphis, Tennessee. I still own that property today. It was actually with the help of my father. He had some 401k money, some stock market money. The stock market was ridiculously high. He was also investing in some other guys' fix and flip projects, so which were out of state as well. So he was making good returns there. And then I went to him and I was like, "Hey, Dad, here's what I want to do." I laid it out in the same way that he was investing in somebody else's deals, and I said, "Hey, let's do this deal, and do you want to fund it with me and take the chance with me? And this is all the work I've done on it." So it was a $40,000 investment to buy that property, to rehab it, and then we owned it free and clear, and we just went to do the cash out refinance, and that's really how I funded my first deal. So that's what I would recommend you do as well. I mean, of course, not everybody has a dad with 40 or 50 grand in the bank, right? But find people close to you who know you, who trust you, and maybe they're not going to put in the full amount, but maybe you can get 10 grand from them and then use the rest as hard money lender. Go find a hard money lender or a bank who can finance it for you. And maybe that first deal can't be a huge value add. Maybe that first deal needs to be a turnkey or some other fashion of it. Not essentially turnkey, but turnkey or something other than it, where you can just buy a property and rent it out and just get cash flow and just build up your own equity. Get a job that pays you some cash and start saving that cash and use that cash for, buying your first property, etc. So that's really how we funded our first deal. How did I find my first market? This is another question I get asked a ton. So finding the first market. So I look at a bunch of different things. Of course, it's progressed over time. The first time I did it, I was really just following the herd, which I recommend you don't do. But some of the main things that I look for, and you can find this on my website too, martelturnkey.com. You can go to our markets, and then you can click on the different markets I'm invested in. And then from there, you can see kind of the criteria I chose to figure out which market I like the most. Not what I like the most. Figure out what information I look at when looking at a market. So some of the things are unemployment rate, job growth, population growth. I look at the diversity of workforces. I want to make sure that there's no huge industry running the whole entire town. So I want to make sure there's some sort of diversity in the workforce. I want to make sure that what happens in Detroit doesn't happen in mine, where one industry leaves and all the jobs have left. So that's kind of what I'm vetting for with looking at that information. Something else is the number of colleges. So I like to see colleges, of course, means students, means young students who are hopefully going to stay there after work. So it's a constant cycle of new people coming into the town who want jobs, who are young and millennials. That also does something else to a city. It really changes the way the city is laid out, because these kids who are right out of college can't afford much. So then they therefore go and create their own little neighborhoods, which are typically in not very good areas, but they go and live in these places because it's the only place they can afford, right? And then therefore that ends up changing these markets. So it's a very interesting thing that happens with not college towns, but cities that have a good amount of colleges in them. So those are the things I look for, major employers. And then after that, I kind of dive really deep into the neighborhoods. So once I see that the market has some good metrics, then I kind of dive even deeper into different neighborhoods. Why this neighborhood? Where are the jobs? Where are people moving? What's the path of progress? What's the mayor's mentality about the city? Where does he want to move people or businesses? What incentives is he giving for people to move into his town? Why his town? So those kinds of things are what I look for. And then I guess a little bit more about this podcast and what it's going to be about. I mean, I live in Los Angeles. I own a turnkey rental property business, and I also invest, to grow my own portfolio alongside that business, in the same exact markets, same exact neighborhoods, everything. So, I want to talk about investing out of state and the struggles of getting started, and how to fund your first deal, what money you can use, different ways to finance deals, ways to grow your rental property portfolio, the different markets. I want to explain to you kind of how much time and risk there is in actually doing a BRRRR. A lot of people are out there preaching to do the BRRRR strategy and to do all these out-of-state investing types of things, but I've seen a lot of people get burned, getting burned to the point where they quit their job to invest full time because they were doing so well, and now they're $500,000 in debt and owe their father money and owe everyone around them money, and they have to go and get a job. So I want to prevent that from happening, and there's some stories that I can share too about how that happened and why that happened and how I'm kind of preventing that happening for me. So I'd love to share those stories as well. I like to talk about different markets, different financing strategies, how to choose a market, maybe help you with analyzing your own market, stuff like that. I also want to interview a bunch of other investors who are not just doing what I'm doing. What I do is pretty unique, but I like to interview people who are flipping houses out of state, or people who are buying retail complexes out of state, or buying larger multifamilies out of state, and ask them questions, and have you guys ask questions with me as well. So I think I'm going to create like a Google form where you guys can ask questions with me, and then we can ask that person together kind of questions about how they got started, or whatever you guys want to know. That's kind of it. That's a little bit about my background, and you can check out my websites. martelturnkey.com is probably the best place. You can see really where all the markets I invest in, the kind of deals that I'm doing, etc. It shows all my deals on there. That's probably the best place to go and look. But yeah, I'm excited. This is episode 1 of Real Estate Investing with Antoine Martel. I hope I can really, my goal of this podcast is really to get you guys to make that first step, whether it be, buying your first property out of state and just collecting cash flow because you have a full-time job, or buying your first BRRRR project out of state and, mitigating risk as much as you possibly can. And kind of walking you through those steps is really what I'm here to do and what I'm interested in doing. So yeah, I hope you enjoyed this episode. Hope you enjoyed learning a little bit more about me and my background. It's going to come up again and again throughout this podcast. And I'd also hope you enjoyed learning a little bit more about what this podcast will be about. And if you guys have any ideas, please feel free to reach out to me. If you go to Marley Turnkey, my email is in there. You can give me a call or shoot me an email about the podcast and what you'd like to see or what you'd like to hear about. And I can certainly make episodes, around those topics and those ideas. That'd be great. Thanks for listening. See you in episode 2.
The
podcast you just heard was recorded with Anchor. If you want to make your own, download the Android or iOS app completely free from anchor.fm/podcast. That's anchor.fm/podcast.